Happy Monday, traders. It's 8:01 a.m. Chicago time on Monday, the 24th of August, 2020. Thanks for joining me for episode number 1825. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we are just on a tear on a risk-on basis, especially in the NASDAQ, just vertical trading in there. Strong push up. The DAX, though, on a percent basis, exceeds the NASDAQ with 314 points up since Friday's settlement, trading at 13,068 or 2.5%. 2.5% on the DAX index. Euro stocks up 2.4%, up 78 points. Crude oil's up 48 cents or 1.16%. And then comes the NASDAQ up 124.5 points before we open, up 1.08%. Just can't get enough of those tech stocks, I guess. The Russell's up 15.7 points or 1.01%. The Dow's up 273 or 0.98, and the S&P's up 28.75 points. We're opening in a gap higher. The S&P's up 0.85%. Gold is up, but still below 2,000, trading at 1959. Gold's up $12.30, and the laggard today is the U.S. dollar, trading at 92.93 and a half, down 30 and a half cents. The Bund is off 10 ticks, and interestingly, the bonds and the treasuries are just above Friday's settlement, still remaining positive. So that's where that is. Really, the biggest news is this FDA, the FDA emergency use of antibody-rich blood plasma on COVID-19 patients lifted treatment hopes and spurred bets of quicker economic recovery. That's the big news, that the FDA is approving this antibody blood plasma as a treatment, which President Trump hailed on Sunday and did a press conference on. This comes at the same time as global dividends are being cut by 17 to 23%, amounting to about 400 billion a year globally. So overall, the market's really optimistic. Again, risk on is all we care about this morning. It's really pushed quite a bit. We popped through the 3,400 in the S&P on what was a quick flush up, and then quick spike up, and then pulled back, and we've been in a rally. The NQ chart is quite fantastically parabolic, and that's where we stand this morning. In terms of what's out there for the week, as far as high tier or high impact numbers, we did get GDP growth this morning. We get the GDP growth out of Germany tomorrow morning, year on year, Q on Q, expecting contraction, year on year, negative 11.7. IFO business climate also comes out of Germany tomorrow. Nothing major out of the U.S. The U.S. gets durable goods orders at 8:30 Eastern tomorrow or Wednesday, and GDP growth rate Q on Q on Thursday. Friday, we get GfK consumer confidence out of Germany, GDP growth out of France, and personal income and spending out of the U.S. Those are the major or the highest impact releases for the week. Now remember, Q on Q, the GDP growth in the U.S. is down like 32 to 35%, something like that, something really insanely high and very, very poor. So that's where we stand. Let's take a look at what we expected on Friday versus what we actually got. Friday, the main scenario, follow the green. The main scenario is a pullback was looking for a pullback into the 71 area, and then was looking for a pop higher for the market to actually push through the all-time high, which was at 95, I believe, or 93 or something like that, and then squeeze into or close to the 3,400 and come off into the close. Here's what we actually did. We opened up and pulled back to 3374, right to the point of control of the prior day, as opposed to pushing down to 71 down here. And then we took out the prior day's high by a tick, pulled back, consolidated, but held to the high end of the range extension up, took out the IB by a few ticks. Fairly dull trade, and then it finally turned higher and went to 33.96 and a quarter, putting in new all-time highs on the S&P in what was a weak top. The S&P closed quite weak on a double distribution profile on Friday, giving us a very clean and clear separation between the upper and lower distribution at 33.90. So as long as the overnight session on the reopen on Friday holds at 33.90, it is likely to float up, and boy did it hold. It pulled back to 93.50 and never looked back. Here's what has happened since then. This is the orange is the extended trading hours here, and as you can see, the market just can't get enough. Pretty strong push up after poking through to the 93.50, and overall the market has been in quite a parabolic move higher. The delta has been kind of laggy, but again, it's overnight trading. Volume is quite low, 228 given the range. Per unit of range, the volume is relatively low. And if you look at the profile, what does that say? Multi-distribution profile, market actively seeking sellers, and so it is squeezing up, consolidating, and then basically flagging, and then squeezing up again and flagging and squeezing up. So we ended up with a multi-distribution profile with the volumes coinciding with these stock zones here a little bit. But overall, everything, all of these stock zones, all these gray levels are measured move targets. They're not intended for entry short. They're intended as targets on the way up. So what we have here is volume that is relatively low for the fact that we are way up from Friday's close, and a pretty decent range for the session, 31 points or so. And so far, it's just not giving anything back, leaving the mid and VWAP behind and in the dust. And it's really, if you watch this thing trade, it is really grinding up very steadily. Pretty tough trade if you're not already in. It just you have to kind of get in on a pullback and just sit for a while to see any relief. Here's what the order flow looked like in the overnight session. We open, we consolidate for a little bit. Let me squish this scale down. We consolidate for a little bit down here, and then we break higher, hold steady, hold the zipper steady at the upper end of the range. So as we consolidated here, we see that we broke, we held the upper end of the range, the consolidation range, and then off to the races we go. You can see volume kicking in. This is a delta. This is showing delta. Positive delta much stronger than negative delta. And we are lifting and lifting and lifting through these liquidity areas. We've seen several collisions in the overnight session with volume. Essentially, the market lifting these offers and these offers look like, we cannot know what they are for, but to me, they look like offers to exit portions of trades. So as the market is pushing higher, it's just not, it's not pausing or basically holding any of these high liquidity areas. And what's interesting is the way the order book presents itself and has presented itself, including on Friday. There are a lot of spikes in the order book. Look at these spikes here. Very odd behavior. We don't see that very often, and so we end up with these lines, these thicker lines. It's very very strange. I haven't seen that before, and I'm pretty certain that this is not a problem with the platform. Remember, I'm using Rhythmic right here, as it says right here, and this is on live real data, a real account, real live account. So the feed here is expected to be correct. I believe it's correct, and we just get some odd liquidity up here, some odd heat map looking structure, very very difficult to read. Now listen, this is the thing. These rally markets to new all-time highs, not my favorite. Do not like them at all. It's not my kind of trade. It's one of these things where you have to act early so you have to take a lot of information risk instead of price risk. Act early and kind of sit there. And we have we have a gap this morning, so gap rules apply. If the market is unable to become responsive early, at least within the first hour, then we're likely to continue to drift higher and leave a gap zone below us. So this is what we're set up for today. Let's take a look at what's expected for today now. So what do we have? We're opening near the high. The point of control for the overnight session is at the high. This still has some fuel to go higher. So the expectation this morning is an open auction out of range that balances the overnight inventory briefly, but I'm looking for this high to be taken out for it to continue to squeeze higher. It is likely to consolidate after attempting lower than higher and expect it to hold in the middle of the range before later in the session squeezing up. It is a Monday after all, and we are opening in a gap, and if we don't close that gap early on, it is likely to stay there and it's likely to consolidate and balance. The market has run quite a ways. And so the expectation is that sellers are likely to be shy, as they have been all along, but buyers are likely to be cautious as well. And so it's really one of those kind of wait and watch type of things. The secondary scenario is a push immediately through the overnight high, squeeze in here, it falters, we get an impulse back to the opening price, squeeze down below and push into the 34.13, 34.10 area back to VWAP, consolidate and hold the middle and hold sideways to set us up for balance on a gap up and an open gap zone for tomorrow. Okay. The tertiary, or the third scenario, is of course the open, test up, break the high, drive lower, consolidate, squeeze into the VWAP and mid, push below, and then hold steady, keep giving us a gap still, but more of a driving behavior towards the prior range. Not seeing it closing the gap. The gap's quite a bit below us. Quite a bullish session so far. I don't expect a reversal there in the way participants are going to come in and trade the market this morning. So that's that. Hey, it's a very short trader bite for once. I don't have much more to offer. As I said, I'm not a huge fan of these grinds. The historical volatility has collapsed in the S&P, and the ranges are falling off, and so we expect the volume and the range to continue to fall off as we put in new highs. And it is what it is. I know that there have been many people talking about how this is overpriced and how to expect a dip or push down or whatever, saying that for weeks and weeks and weeks. And those people are just helping fuel this continued push higher. There's plenty of liquidity to go around. About $1.5 trillion have been added to checking accounts and liquid assets for Americans, and that money's got to go to work somewhere. And so there's plenty to go around and plenty to keep buying off a lot of this stuff. I mean, look at the NASDAQ, for God's sake. This is the NASDAQ right here. I mean, this thing is just tearing right up. It wasn't so long ago that we hit 11,000, and now we're trading at close to 11,700. It is definitely on shooting for the moon. And as we all know, when that happens, there's likely to be some sort of corrective action as sellers come in, and that's what the market is seeking at the moment. But until that happens, I'm not going to sit here and speculate that today is the day or this week is the week. Just trade the price in front of you, pay attention to what it's doing at the moment, and let the market guide your trading as opposed to you pushing, uh, reading too much into a rotation down and becoming solidly short. Just read the action in front of you. Break down the day into pieces and read it as it comes. Good luck.